Hello friends, one of our viewer wanted me to review two shares, so let's start the review. First share is Carysil, and if I look at the 1 year return, it's minus 47%. 5-year return is 278% positive, and let's look at maximum return. Maximum return has been fantastic, 41,657% return. So in terms of return, the returns looks amazing, but if I look at the chart pattern is going like this, and then straight away it has gone like a rocket. So with the chart pattern only we can make out that this is not a company which is consistently growing its profit. So you can see during this time it was a period of around 6 years and the company was flat, and then suddenly after COVID this company started giving a big run up, and the market cap of this company is just 1000 crores. So it is like a penny company. So it is like a penny company, a penny share we can say, because penny share is not determined based on the price, it is determined based on the market cap. So any share whose market cap is below 1000 or close to 1000, that are all penny shares. The biggest disadvantage of having such a small company in the portfolio is these companies can be easily manipulated by the operators, and their numbers are also not reliable. So whatever numbers they are presenting, there is a possibility that it may be true as well, but there is also an equal possibility that those are all cooked up numbers. So that's why the smaller the market cap, the bigger the risk. So now let's look at the numbers and the business of this company. So this company is in the business of manufacturing and trading quartz kitchen sinks, stainless steel sinks, bath products, tiles, kitchen appliances and accessories. And here you can see that the company is doing another 20% expansion by adding 1 liter units to cater to the demand of global customers, which is a good news from the shareholder point of view, because it means that the company business is expected to increase in future. And here it also says that they recently got into a deal with IKEA as well, wherein they'll be manufacturing and supplying the composite quartz kitchen sinks for their global requirement, which is again a positive news. So now I'm at the yearly numbers for this company, and let's go back till March 2021 and let's keep an eye on the operating profit. So in 2021 it was 11, then it dipped, increased, then dip, then it was flat, then again it increased in 2019, and increase in 2020, increase in 2021, increase in 2022, and for the 12 trailing month again there is an increase in the profit. So if I look at the numbers for past 2-3 years, the profit of the company is increasing, the sales are increasing, so that's a good sign. And if I look at the shareholding pattern of this company, the promoter holds around 43.9%, FIs hold around 0.26%, and DIs also hold 6.37%, and public holds the remaining 49.45%. So I'm not seeing major changes in the shareholding pattern, so nothing seems wrong or fishy here. It would have been a red flag if you would have seen that the promoter holdings are decreasing and the public holdings are increasing, but that's not happening here, so we are okay with this as well. So in terms of the business and the numbers, it looks okay, the profit are increasing. But since this is a very small company with a market cap of only 1000 crores, the first rule need to be applied here, which is in case you want to invest very small portion of your capital and also track the numbers of this company. If in the quarterly numbers you keep on seeing an increase in the sales and the profits, then you should continue. And as and when your conviction increase on this company, then you can add more. But do not start in this company by putting a lump sum amount, assuming that this share will become multi-bagger. That can also happen, it can become a multi-bagger, but it can go reverse as well. So we have to try not to be greedy, and we have to invest sensibly by managing the risk. So a okay company from my side, which will require a lot of tracking and stop loss. Now let's quickly check the support and the chart pattern as well. So this is the chart pattern for Carysil, and currently it is trading at 445. It touched around 937, so almost 50% down, which can easily happen in a company with this size. Now if I look at the support for this company, the support for this company will be now available around 390 rupees. So there is a possibility that from this level also it may go down further till 390, and from 390 it may start recovering as well, and that may depend on the quarterly result also. But in case if it breaks 390, then the next level will be around 310. So it's a super risky company. Again I am repeating, the amount invested should be very small. Next company is Caplin Point Labs, and if I look at 1 year return, the company has provided negative return of 16%. If I look at 5-year returns, it has provided just 15% return. And if I look at maximum return, then maximum returns are again amazing, 17,000% return. But again we see the same chart pattern of a company going like this and then suddenly this, then with a lot of fluctuation. But again we see a similar chart pattern wherein a company has suddenly gone up, and then you can see there has been a lot of fluctuation also in this company. So this company belongs to the pharma sector and is engaged in manufacturing and sources of API, which are nothing but active pharmaceutical ingredients which are used for medicines, which are kind of raw materials for medicines. So before going on to the numbers, again this company is also a small cap company with a market cap of just 5,000 crores. So again the same rule applies here as well. No matter how good the small cap company is, the investment should be very small only. Now I'm at the yearly numbers for this company, and let's look at the operating profit. Operating profit was 8 crores in 2011, then it increased to 11, 22, 36, 60, 64, 125, 195, 232, 260, 329, 395, and now for the 12 trailing month it is around 400. So companies' profit are increasing constantly, which is a good sign. And now if I look at the shareholding pattern, the shareholding pattern also looks decent. Promoter holds around 68% stake, FI holds around 2%, DI is 1%, and the remaining is with public. So guys, in the shareholding pattern, whenever the promoter holds a good percentage of stake in the company, it is always considered as a positive point. Why? Because whenever the company shares goes down, they are the one whose wealth is going to get impacted the most. So if you see in a company where the promoters are continuously decreasing their stake, then it can mean that there is something wrong with the company, because promoters and founders of the company are the first person to know what is happening in the company, what is the future of the company. So the shareholding pattern looks decent, nothing wrong here. So this company also looks okay, nothing very alarming about this company, but nothing too great as well. My first preference still will be to go with the market leader in the pharmaceutical industry, which will be Davis Lab. You can see here this company can easily fall by around 60-70%. So in these type of company, buying at the right time is also very important. If by mistake you have bought it at the top, then you can get stuck in this company for 3, 4, 5 years as well. And holding any company for 5-6 years which are down 50-60% is not an easy job at all. So that's why my first preference are always consistent compounder companies, the market leader companies, the companies which has competitive advantage, bigger market share. If I were you, I would have not invested in either of these companies, because there are better companies which are available in the stock market. And also when we look at the past return, it looks very great that it has provided 1000% or 10,000% return. But finding those person who have held this share for such a long time to get those returns are very rare, because the type of fluctuation that you'll see in these type of share will not let you hold this share. But if you want to try it only with a very small amount. So that's it in this video. We'll meet in the next video with some new information. Thank you.